Hello, guys. If you were to take a guess on what trend the market is in right now, what will you say? Uptrend, downtrend, or consolidation? Obviously, you will say it's an uptrend. And simply put, an uptrend is nothing more than a market that is showing high, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. This higher high and higher low situation is what is referred to as an uptrend. And the reason we are looking for trending market is because it gives us accuracy on a trade. You have probably heard follow the trend before. You want to be trade, you want to follow the trend to the right direction. You don't, if the market is buying, you don't want to be below. You want to trade, you want to buy with the market, and if the market is selling, you want to sell with the market. You don't want to go against the trend. And most beginner I know we go against trend. Which because they take trade anyhow, they just go against trend. That's not how to do it. If you continue doing that, you are going to lose. You are going to be broke in no time. You want to trade with the trend. Most beginner I know just go against the trend. That's not nice. If you don't know what to do with your money, give it to your junior brother to spend it. At least it will make him fat. It will add up a little bit of weight. Yeah, that's what I mean. So if you don't know how to identify trend, it's a huge problem for you, friend. To identify trend, it add good reason to your trade. If you can know how to identify trend, good reason has been in your trade, you can be able to know where the market is going to. It can make a better reward to risk setup. So believe me, it's a good thing to trade with the trend. Trade with the trend, it will help you a lot. So as this market is in an uptrend like this, what do you want to do? You want to trade the market to the upside. You want to buy the market to the upside. A lot of traders can easily identify this. High, low, higher high, higher low, higher high, higher low, higher high. This is a very clear trend to see. It's a very easy way to identify trend. What if price does what price normally does? And price did something like this. High, low, higher high, a little bit of it not crossing. So so at this point, doesn't it get a little bit harder to identify trend? Of course. So if that's the case, I want to give you the most easiest and simple way to identify trade, to identify a trendy market right now. What we have in a trendy market are impulsive move. Impulsive move. That is the big move that brings into new highs right here. This impulsive move is the big move that breaks into new highs right here, right here. Right here again is our impulsive move. Right here is our impulsive move. These are the impulsive move right there. These are the impulsive move. After an impulsive move, the market take a pullback. These are our pullback. These are our pullback in price. This is our pullback. These are our pullback. These are our pullback right here. This is pullback right here. Followed by our next impulsive move that break into new higher highs right here. This is our impulsive move that break into new high. Here is another impulsive move. Here is our impulsive move again. This is another impulsive move that break into new highs. Then what again? Then pullback in price. This is sorry. This is pullback right here. See, that's it. So the objective way we are going to be identifying trending markets. The best way to look at our attention, the best way to create this trending market is that the lowest low of our pullback must not be broken for us to stay in an uptrend. So once we have this move that break above, once we have this move that break above our previous high, right here, that break above our previous high, right here, we call that an impulsive move. We call this an impulsive move. Once we have this move that broke above our previous high, which is what we are looking for in an uptrend, this market is still in an uptrend until we break below our previous low, which is the line we just put right there. So when we get a break above this high right here, above this high right here, when this market break above this high with a new impulsive move right here, with a new impulsive move, that simply means this market has now shifted from here to this other one right here. That simply means this is where we don't want to see the trend to come break for us to do what? For us to stay in an uptrend. So as long as the market stay above that low, that high, and keep breaking into new highs, that simply means we are looking for buying opportunity. We want to be buying the trade. We want to be buying the trend to the upside. Just follow the trend. You know what I mean? Right here, the market break into new higher highs and give us an impulsive move right here. Give us an impulsive move right here. Right here. That simply means this previous low is where we don't want to see the market to come break for us to stay in an uptrend. As long as the trend continue keep it going higher, we want to follow the trend. We want to buy with the trend. What we don't want to see is this market come down and break below this previous low. But as long as this market is still in an uptrend, we want to be looking for what? For buying opportunity. But immediately the market break below this place, we are shifting our mindset that this market is buying. It's automatically shifting to selling. So I don't know if you understand. If you don't understand, go back to my video and rewatch the video again for a proper clarification. Thank you. I know that sounds complicated, but we will do it on the rechat. So just hold on. So that's where we are going right now. This is how I personally identify how trend is moving. If the trend is going high or is going low, that's the best way I search for my trading target, where the market is going to. Where's this market heading to? This is the best way I check it. I won't give you another thing that wouldn't work for you. This is the best way and easy way. So I don't know if you understand, but please try to understand. Thank you. So let's jump to the rechat right now. So if I were to ask a simple question, if this market is in an uptrend like this, do I need to buy or sell? Honestly, it's buy. We want to be buying. We want to be following the trend. So what are we going to do is buy with the trend, follow the trend. You don't want to short. You don't want to go against the trend. You don't want to say when the market is buying. So follow the trend. Okay. So at this point, what do you expect to happen? We have our high, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. What do you expect to happen? So the market break into new highs. Now, what do you expect to happen? We expect it right here, the market break into new higher highs right here. The market just break out right here. So what do we expect to happen? The market did a pullback, but this pullback must not break below our previous what? Our previous low right here. The market should not break our previous low right here. If the market break this previous low, that simply means we have changing our mindset from downtrend, from uptrend to downtrend. Let's see. Boom. The market break into what? Into new lower lows. That simply means we are shifting our mindset that this market is buying, is now initially selling. So if for a uptrend we are looking for higher highs and higher lows, what do you think in a downtrend we are looking for? Is the complete opposite, right? We are looking for a starting up here. We are looking for a trend that start from top to the bottom. So we start for a high. No, sorry, it's not high. Low, high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So with this being the case, just like the other example, I will give you the other example right here. If we are heading lower, it's really easy to identify trend. You see, this is a very easy trend to identify. What if price does what price normally does and it does something like this? What if price does something like this? So just like an uptrend, we have an impulsive move, a big move that break into what? Into new highs. followed by pullback right here, pullback right here. What we do not want to see, what we don't want to see is the market come back and break below our previous low. That's right here. We don't want to see the market. So as long as the market is trending above it, we are still in a selling position. We don't want to go against the trend. As long as this market is selling to the downside, you want to follow the trend. You want to sell this market to the downside. But if, for instance, that happened, that simply means that simply means the market have changed our mindset that this market is now left from selling into buying. So at that moment, we won't be looking for selling opportunity anymore. At that point, we'll be looking for buying opportunity. That's if the market break below our selling zone. So that's it. I just hope you understand, but please try your possible best and understand. Yeah. So that is my objective way of identifying trend. That's the way to identify trend. The previous low must not be broken, and the previous low in an uptrend must not be broken, and the previous low in an uptrend must not be broken for the sale to continue. So that's it. It is what it is. And at this point, you have gained a lot of knowledge. You now understand a candlestick chart, how to identify a trend. A lot. You have step by step. You have been able to get things together step by step. But we are still going there. We are going deep. We are still going deeper. Okay. We are going. Now, what we are going to do right now is how to find high probability areas of value using support and resistance. Support and resistance are simply areas in the market that price is likely to react from. Support is an area of resistance. Support is an area of the resistance where price is likely to bounce up from, while resistance is an area in the market where price is likely to drop down from. Support and resistance are useful for three main reasons. One is to spot possible reversals. You can use them as entry point in a trend continuation trade, and you can use them to determine your stop and target. So what we are going to do right now is go over a couple of those. Most traders will go against trend trading. So today, I will be showing you the best and easy way to enter a trade using support and resistance. And I will be showing you how to use it to set your stop and target. So here we are. So the trend starts here. High, low, higher, high. So if we were to put it was here. So the best way to find an entry in this area is that this previous low, this previous support is where you will be looking for your entry right here. This is where you want to be looking for your entry. The market was an impulsive move. What did it do? The market reversed to the downside, but unfortunately, the market didn't pick us and it kept going its way. Do not force yourself on the market. If the market has not yet picked you, do not force yourself. So that's it. The market came and unfortunately didn't pick us and start going up. So the other way is the best way to look for an entry in this area is to enter right here. This is the best entry. You see, what did the market do again? The market did what? It gave us an impossible pullback straight higher highs. Yeah, this is the best way to enter. If the market did not pick you, don't go in. Don't go in. If this market did not come to your entry zone, don't go in. Most people go in here because that's where they normally take trade. You can go in for two places. Most people take it from the up to the other block, which means to this other side. The other people take it from this bottom. But me, in my own trading strategy, that's where I take my trade. I don't chase trade. I take it from one position because that's where I've been taking trade all my life. That's where I've been making profit from. If the market does not touch my entry zone, I'm not going in. So I'm passing what I have to you. So I want to lead you. I want to tell you to do something else, and I'm doing other things. This is what I do. If the market does not pick me, I'm not going in. You see, the market did what it came here. It break into what? Into new higher highs. What did the market do? The market break, give us an impulsive move. What did the market do? Break, give us an impulsive move. So give us an impulsive move back. So the first objective way to enter is going right here. You see, when it gets to your turn, you get it. You don't try to force it. When you get to your turn, you get it. So you see, this is the best way to go into the market. You see again, the market come, it did its own thing, it break into new higher highs. What has the market done? It gave us an impulsive move, pullback, but unfortunately, this pullback did not came to what? To our entry. So we are not chasing it. we are still looking until we see rightful possibility that the market came to touch our entry zone. If the market did not touch our entry zone, we are not going in. So what did the market do? Bring it to new highs. Retest didn't touch and did what and start what? And start going away and start continuing uptrend. You see, the market continue uptrend. We don't chase. We don't chase. Follow, use one strategy. We don't chase. What did the market do? Give us an impulsive move. Pull back. This pullback break into what? Into new higher highs right here. Right here. So if we were to put a pause right here, this is where we don't want the market to come. This is where we don't want the market to come break, because immediately the market break here, we have changed structure to the downside, of which it did. You see, it's nothing more than that. It's this. That's it. You don't need to force yourself go all in. No, set your target. It picks you. It picks you when it stopped you at. It stopped you. Just put it. If the market go against you, put the blame on yourself. You don't have to put it on your trader. Want it. No, just do your thing. That's life. The aim is to come and make money, not to come and feel emotional. If a weak person cannot trade for it, so you have to be strong. You know what I mean? So let me recap again. You see right here, the trend starts here. The trend starts here. Low, lower low. If we were to put a pause on this previous place right here, the market came and did not touch. This is our entry zone. But unfortunately, market missed it. So that simply means we need to keep going down. We need to keep finding opportunity. Just because the market does not touch our entry doesn't mean we don't know how to trade. It only means that you are following discipline. That's it. So you see the market came here, break into new highs. Where did this new highs come? It missed entry again for the second time. It is what it is. So that's it. You see, the market came here and did what? It break into new higher highs right here. It break into new higher highs right here. Higher lows, higher highs. What did this previous high do? It came back into our entry and did what? And started going down. Now this previous point has now been shifted. We are not using that one anymore. This one right here is our previous resistance right now. This is the level we don't want to be broken for us to stay in a downtrend. Now automatically what? The market have broken this previous high. So this have changed our mindset that this market is now selling. The market has now switched position. We are currently buying. Are you getting me? If you don't get it, you can rewatch the video again and start it from there. And you just try to understand it from there. Yeah. Now let's talk about how to use this level as a target. So let's talk about how to use this level for possible target. So yeah. So right now we'll go back to a bullish example, which is buying. So for a bullish example, let's say you got an entry right here, because after the market did an impulsive move, it pulled back, not touching our entry zone, and it will start coming up. What did it do? It break back. What did the market do? It pulled back into our area of entry. They did what? And they start what? Going up. So the best way to enter this trade right now, let me delete it. The best way to enter this trade right now is that this previous low right here will be your target. If you came down and you see an entry like this, then this is how you will do it. You will bring your position tools, then you will be targeting this eye right here. You will be targeting this eye right here. That's about 2 to 3. That's about 2 to 3. The opposite is true for a downtrend. If you are selling, you want your stop loss to be above and your take profit to be below. And why if you are buying, you want your take profit to be above, and you want your stop loss to be below, so that the market won't liquidate you out. And in a downtrend, if you come to your chart and you see something like this, a market that did something like this, pull back and they break, your best way to enter this market is to set your area, your tools, your joint tools, and you mark this area here as your entry. Then you target here. You target the recent high right here. Then your stop loss will be below right here. At least you are targeting 1 to 4. You are targeting 1 to 4. That's it. It's as simple as it is. It is what it is, man. I don't know if you understand it, but if you don't understand it, you can go back and rewatch the video for a better clarification. Thank you for your time. I will leave you guys for now, but for the other day, I will come and upload another video in it so you can be able to gain more knowledge. Please just drop a comment and reply on things you want, because if your comment is what will allow me to know the next thing to do, to know what you really want to know about the market. Your comments, everything support. Please comment, subscribe, do the necessary, please, so we can go together. Thank you for your time.